Hey everybody, Chuck Barone here. It is Tuesday, August the 22nd, 2023. And we're rounding off another month, man. They're just going by click, 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 super fast, crazy. You know, it's a interesting day today, guys. Usually I'm trying to be, not feeling like Charlie Doomsayer, not trying to be the prophet of doom every single day on this show, but man, things are adding up, and the overall vibe, at least for what I'm getting here, is not a good one right now. But anyway, before I get rolling, let me welcome everybody to the show, and as always, thank you guys for your support. You guys come in watching these videos, participating, comments, everything you guys do every day keeps us coming back. We appreciate you guys very much. All right, so let's talk about these markets today. Well, not a lot of data really coming in. Some disappointing news from Standard & Poor's. So the market's just not having a very good day today. The Dow Jones dropping 174 points today. 34,288 on the Dow. The S&P falling 12 points. 4,387 on the S&P. The NASDAQ actually squeezing on a little bit of gain. Not too much exposure to banking, retail, and stuff. So NASDAQ actually gaining 8 points. Not much of a move, though. 13,505 on the NASDAQ. So the market having a little bit of a negative tone to it, and with justifiable cause. The bond market today, another weird day. So you have the 10-year falling 1 basis point to 4.33%. You got the 2-year jumping 5 basis points to 5.05%. So here we go, man. The spread's starting to get back a little bit bigger. And, the inversion spread. Just the weirdest bond market I've seen. And I can't remember the last time I saw the bond market behaving like this. There's just no real certainty as far as rates. Putting a ton of pressure, I think, on the Federal Reserve because this bond market just could, if it just gets the wrong signals, could really have an amazing sell-off, and hopefully that's not what's going to come. The dollar today up small. It's 103.61 on the index, just as strong as always, just hanging in there. Not a lot of real news on the dollar, just still the king of the hill. Metals today, even with a strong dollar, eking out a small gain. Gold up $2.50. $1,897 for an ounce of gold. Silver up 9 cents, $23.39 for an ounce of silver. So there you have metals hanging in there, guys. I mean, these prices, well, not exactly where we would hope they would be. All things considered, doing very well. The dollar strong, tough economy to try to figure. So much uncertainty. So gold and silver hanging in there. Good to see. Oil today, down small. Oil down 47 cents per barrel, sitting at $80.25. Drifting down, I think it was around $86. Coming back down now. I'm guessing it's going to end up pretty much right back in its trough where it seems to be the most comfortable, between $70 and $75 a barrel. We'll see. I think that, oil, is there really a big surge in demand for it? Driving season's almost over. Summer's almost over. I think oil 70 to 75 soon. Bitcoin today, down small, down $259. 25,833 for Bitcoin. Bitcoin hanging in there, kicking it around. I know there's big news coming on Bitcoin over the next month or so. So we'll see where this ends up going. Of course, we'll be here to bring it to you guys every day. All right, so let's talk about news you guys need today. As you guys know, and I've been telling you guys, it's going to be a slow data week, but a couple of things of interest today. First thing, S&P, the Standard & Poor's, comes down, downgrading more U.S. banks today, including some pretty big names. Big regionals. 5 biggest are Comerica, KeyBank, Associated Bank Corp, Valley National Bank Corp, and UMB Financial Corp. These are big regional banks, guys. Assets over $400 billion. The report was also very negative on Zions Bank and several others. S&P said that higher rates, tough outlook for banks in general. You got commercial real estate. They actually were talking about banks having to pay interest on their deposits, which they haven't had to do for so long. You know, they basically had free access to everybody's money. Now they're actually having to pay people to keep their money in the bank. Rates getting more and more competitive as you see people moving their money around where they're getting higher yields. So all of this weighing on earnings. Tough outlook right now for the U.S. banking sector. You know, and the ratings agencies are all over this now. They talked about the cost of money not only rising for consumers with higher rates and more fees and crap attached to everything, but even now the cost of doing business rising for even the people lending the money. We're borrowing at the same time, but you know, now they actually have to pay somebody, and putting pressure on the banks. Hopefully this is going to turn into a mass contagion. We certainly don't want to see any type of banking crisis, at least I don't, because I know what that leads to. We'll get the government involved. Once the government's involved, Wall Street comes in, always cherry picks the best stuff for themselves, leaves the crap for the government to take over. Of course, that when I say the government, that's us, the schmuckatellis out there. We get to eat the losses, and the banks and the big shots get to, you know, cash in. Hopefully that's not going to go this way. You know, these banks have seen this stuff coming for a while. This commercial real estate thing is not new news. We've been talking about it on the show for a long time. So hopefully, you know, they have some type of plan, some type of scheme to get through these times that seem to be coming, right? Then you add on, this is another interesting one, big trouble now coming with credit card debt. Well, we knew that was coming. Medium and small banks are seeing record delinquencies on the credit card they're issuing. Now when I say medium and small banks, that means banks not ranked in the top 100. Okay, so these are small local banks, small regionals. Delinquencies on cards they're issuing now almost to 8%. That is 8% late, badly late, or in default. That's a new high, going all the way back to 2008 and the bad old days where after the big kablooey where nobody could pay anything anymore. Tough scenario for the banks. At the top of this downgrade, now you see this happening. Of course, you know, it starts with these small banks, but it won't be long, and it'll be the bigs that eat billions of dollars in bad credit card debt. Credit card debt, we know, talked about on the show, recently passing $1 trillion in this country, a sickening number. And Lending Tree says the average interest rate now on credit cards in the U.S. is over 24%. So do the math, man. 1 trillion, 24%, that's $240 billion. $240 billion now Americans are spending on interest on credit card debt. I would think that that money certainly could be better put to use doing other things. Shame on banks charging people interest rates at 24%. That used to be illegal, you know, they used to call that usury, okay? You weren't allowed to do that. Even the shoddiest payday lending places weren't charging just gnarly rates like that. Banks getting away with it. Banks getting away with it. So now you got the coming real estate, commercial real estate kablooey. You got credit card debt cracking up. More people in debt, not only maxing out their credit cards, but taking on new cards to add on more new debt. So you put all these scenarios together, man, this is not good. Crack up of real estate portfolio. Crack up of credit card loan portfolio. banks downgrading, credit agencies all over them. Not a happy day today, guys. Then you add on existing home sales, which is the data we got today, falling again, man. Existing home sales, basically, I mean, sales are falling, but prices are rising at the same time. We got this amazing conundrum here. You got high rates on loans, mortgage rates now approaching 7.25%. You got a very limited supply of existing houses on the market because people don't want to sell their houses and give up their 3% mortgages. And I wouldn't. So now, another crappy month of sales in existing housing. Sales falling 2.2% from last month, which was also a very crappy month. So they just keep getting worse. This is the slowest pace for existing home sales since back in 2010, basically the trough of the great real estate crash, when prices were bottoming out. Limited inventory, though, keeping prices high. It's just, I've been doing real estate. I've been in mortgages and real estate since 1995, a long time. I never seen a market like this. I really expected prices to come down. Here in Las Vegas, I was seeing a median of around 350 to go with interest rates like this. Not going to happen, man. The national median sales price across the United States almost to $407,000, $406,800. So 50% of all the sales on real estate in the United States now selling for more than $406,800. I guess there's a new normal in real estate, which is crazy because you got sales down 16.6% from last year, which was a crappy year. Especially at this point. At this point last year, we were talking about rates in the fives and everybody's jaw was dropping and they were freaking out. Everybody thought by this time this year, rates would be, steadying at least. Doesn't look like we're going to get that in real estate. It's just the craziest time. So now you got, let's add all this stuff up, man. Commercial real estate about to implode. Debtors, consumers in the country up to their eyebrows in debt and adding more on all the time. Existing home sales. There are no existing homes to buy, so existing home sales cratering. At the same time, this limited supply, limited amount of transactions, creating a competitive atmosphere. Man, can you believe that, like, at the starter house level here in Las Vegas, which is around $400,000, if you can believe that, $400,000 for a starter home. There's actually competing bids, multiple offers on starter houses. So shutting out first-time buyers, that's just a continuance now. The only people really, I think, that are buying houses are people that are moving here to Vegas, have sold a property somewhere else, coming in with some real money, and can afford to pay, can pay down the mortgage enough, or the sale, and only have to take out a smaller mortgage to create a payment that's not going to sink them every month when they write the check. I'd see trouble coming, guys. I think that, everybody wants to have this whole idea of a soft landing and everything's going to just be fine. It just doesn't seem that way to me. You got political turmoil in this country. We can't get along on the simplest things. We're about to have another big government fight and a big government shutdown, right in the face of our government's credit being lowered because of this same kind of stupid crap. Then you got, the greed in our corporate world basically overshadowing any kind of real semblance of normalcy. Cracks appearing everywhere in this economy. The Fed forced to bring rates higher and keep them higher for longer if they're going to stick to their mandate. Fascinating stuff coming, fascinating times. I'm telling you guys, 25 years from now, they'll be studying this in economics classes, for good or for bad. We'll see how it turns out in a little bit. But fascinating times we're living in. Anyway, guys, that's it for the day. As always, we really appreciate your support. You guys, you know, it's really something knowing that every day some people are going to come and actually give a crap about what I have to say about these markets. I appreciate that. We'll be back tomorrow to bring you guys the news you need. As always, if you like what you're hearing, please hit the like button. It gets our channel out there, changes the algorithms. More people get a chance to view our videos. Hit me up in the comments. As always, we appreciate your guys' comments. We'll be back again tomorrow, guys. Until then, take care.